Let's now take a look at the markets. The rand held steady yesterday, while the JSE turned firmer after official data showed the economy expanded marginally in the first quarter, dodging a technical recession. That's despite intense power cuts. Senior equity analyst at Sentio Capital Mbuso Zulu joins us now for a market analysis. A very good morning to you. Thank you for your time. Give us an overview of how the general markets are faring and how they opened this morning after digesting local GDP data.
Morning, Paul. The markets are faring just slightly down this morning. The JSE was down 0.15%. And the main driver of the markets is the Chinese data that's come out this morning. That is a bit on the negative side. You've seen exports negative and imports as well negative. And this bodes a little bit negative for the recovery that investors are looking for out of China, looking for stimulus to come through, and you're looking for a rebound in that economy. And that, of course, will help the SA markets as well, because we are resources heavy and we are tied to the recovery in China. So you've seen the JSE open slightly lower, and driving that downward move are the resources, the utilities. You've got energy going down, materials as well, and you also have consumer staples also driving the move lower. What is up is healthcare and communication, as well as consumer discretionary. So the retailers, the SA Inc. is holding up the markets a little bit, but mostly the tone is slightly lower, just as a result of that Chinese data that's come out that's put a sour tone into the markets.
Yeah. Mbuso, oil extended losses today as concerns over global economic headwinds deepened, erasing the price gains booked after top crude exporter Saudi Arabia's surprise weekend pledge to deepen output cuts. What's the situation there?
Yeah, I think the focus has come back to just slower world growth. And you did have, as you say, Saudi Arabia prop up the oil price as they announced that cut over the weekend of $1 million per barrel per day. And that puts them now at producing 9 million barrels per day. And this actually has them back to sort of around COVID levels of production. But that hasn't been enough to sustain the oil price rally, as the market is looking towards just a slowdown in global growth. And that is really what has driven the oil price lower.
And looking at company news, Pick n Pay has called off plans to buy 60% of its new distribution center at Eastport in Gauteng. Talk us through some of those developments.
Sure. So Pick n Pay already has a distribution center in Gauteng. It's the Long Meadow Distribution Center. And they've built the Eastport DC just to future fit the business as a larger DC and to be able to amalgamate around 3 other distribution warehouses here in Johannesburg. So it's bigger and better. And part of the ownership was that they were going to own parts of it, but looking at the financial situation of the company right now, in the last set of results, they cut the dividend payout ratio just as a move to try and preserve cash because of all the growth initiatives that the company is undertaking. At the same time, they also have cost pressures from load shedding, from a consumer slowdown, and they're trying to balance the future growth initiatives that they have with trying to keep the business steady with the higher costs, inflationary costs that they are experiencing. Hence, then they have taken this decision to not finance that DC themselves and look for partners rather to do it, because it is a better use of their constrained cash flow at this moment.
Construction, engineering and mining group Avenge says it's received a 210 million rand payment with interest from a loan it called in relating to the Trident Steel disposal. What do we know about this loan and how the firm plans to spend it?
Okay. So yes, Avenge is an SA construction company. And in 2018, they took the decision to simplify the business, to deal with historical debts that they have, and to move from 20-odd divisions to just focus on 5. And And over time, they've disposed of other divisions, and now Trident Steel was left, and that sale has been concluded. It was $1 billion rather, in proceeds that were received, and then parts of it, the 210 million, was for a 30% BEE, so it was to ring fence the BEE portion in another company, and then they had a call option on it that they would call at any time that they wanted. So now that they've received this 210 million rands, then that finishes up whatever loose ends that they had on the sale of Trident Steel. Now the business is focused on the two divisions, McDowell, as well as the Australian business as well.
Very well. Thank you so much. Let's leave it there for now. Wrapping up the market analysis there, Senior Equity Analyst at Sentio Capital Mbuso Zulu.